in the banking sector, which, wow, look at those. They have had bang up earnings. Isn't this all fabulous? Nothing to see here, kids. Just move along. So let's talk about this. So you think this has value and you're willing to work for it, save it, and use it?
Welcome back to an unmissable episode with Lynette Zang. Today, we're tackling a critical topic shaking the financial world, the longest inverted yield curve for bonds in history. Why is this happening, and what does it mean for your money and future? Join Lynette as she demystifies this complex phenomenon, revealing the underlying causes and the potential fallout for the economy. This is essential knowledge that can impact your financial decisions. Don't miss out.
Because we now have the longest bond market inversion in history. What is that? That was the old one, and let's see, what was that in? Oh, that was in the 70s going into the very early 80s. Well, guess what? Today, we have a longer bond market inversion than we ever have, even during the 70s when we were transitioning into a new system. And guess what? We're transitioning into a new system right now, too. So, what does a bond market inversion? As a reminder, it means that the shorter term rates, the 2-year notes, are higher than the longer term rates. So it makes more sense to think short term versus long term, right? That is an anomaly. You can see the other places where it hit back in prior to the crisis in 90, back in 99. Here we go, 2008, but look at this now. This is serious. They want us to think that this doesn't mean anything anymore, though I believe that because this is the longest bond inversion in history, and we are transitioning into a brand new financial system, that's what that is telling us. And that there is a crisis ahead. Is this a warning of a U.S. and a global hyperinflationary depression? Because what do they have, right? All they have is money printing and more debt. But there is a structural shift that's happening in what supports a currency? The full faith and credit of a government. Think about that. As long as you trust them, you have that confidence, you have faith. And then you will extend them credit, which means loan them money. But we've already been witnessing that central banks are buying back and monetizing the debt of government. So this is not a new structural shift. This is one that's been in the making for a long time. And so I got to tell you, warning, warning, warning. This means something. This means a lot. And yes, I believe we are headed into a hyperinflationary depression. But hey, here's the bank's expenses. Now, we do know that every single one of them passed the Fed's stress test, which of course is garbage. We don't even know how they come up with some of those numbers. Even the banks that they're judging don't know this. So I think that's pretty interesting.
What if the traditional financial world could be connected with digital finance? A company named DeFi Technologies, traded under DEFTF, did exactly that, and we are just surprised to see how it has revolutionized the investment world. It's the first ever public financial tech company to allow traditional investors to invest and gain exposure to digital assets like cryptocurrencies, blockchain-based projects, and digital finance-based ETFs called exchange-traded products or ETPs. You might think people could already do it. After all, buying Bitcoin or Ethereum means investing. Well, that's true, but DeFi Technologies did something revolutionary. It made investing in digital finance smoother, more secure, and easier, as is the case in investing in stocks and dividend-paying ETPs. A few years back, we knew this company would boom, and the latest figures prove that. The company has a market cap of about $400 million. So far, the company has generated over $100 million in revenues. In only the first quarter of this year, the company's revenue crossed 13.4 million Canadian dollars, with an operating net income of 5.3 million Canadian dollars. Just recently, the stock price went up by 25% because of DeFi Technologies' crypto trading success. Yes, it is making sounds because this is a one-of-its-kind financial company connecting traditional finance with the digital world. As of now, the stock price is 1.54, but analysts believe that it will soon cross the $3 price target. However, Russell Starr, the head of capital markets, said that $3 or $4 is simply nothing. The reasonable price is $7 or $8, and after that we can then go for estimates for further growth. Listen to what he said.
We're not looking for $3 on this stock or $4, especially in an environment that we're looking at now. We're looking at 8 to 10, which sounds far fetched, but 5, 6, 7 is where we should be trading just on a reasonable comp basis, and that's not me making things up. Just go look at what all of the other crypto companies are trading for, and I'm not sure any of them are profitable. They're trading on revenue multiples.
That's why people like Anthony Pompliano, who is the face of crypto, are shareholders of DeFi Technologies. Anthony even said that it's a stock he would have pitched at the Sohn Conference Foundation, a company that supports and finances cutting-edge projects.
Some of the picks from yesterday's conference included Carpenter Technology Corporation, Natera, European chemicals company Solvay, and cryptocurrency Ethereum. Each of these picks has a solid thesis behind them, but I think they will be drastically outperformed by the stock that I would have pitched yesterday if I was at the conference. My pick would be DeFi Technologies.
But guess what? DeFi Technologies does not need it because it is doing wonders. Just recently, it announced a buyback program. Yes, we have never seen this, but this over $400 million company is doing a buyback. This proves they are loaded with cash, and they want to ensure their shareholders know the stock means solid cash. Interestingly, DeFi Technologies' stock price is currently undervalued, presenting a unique opportunity for investors. This is a rare chance to be part of a groundbreaking project that is set to transform the financial landscape. Investing in DeFi Technologies now is akin to investing in a high-growth company in their early days, providing access to the innovative financial products and decentralized finance solutions of the future. Listen to what Russell Starr, the head of capital markets, said about the real power in DeFi Technologies and what price it should be at reasonably.
99% of the world's companies trade at 20 times profits. We are trading at 3 times profits. If you're not getting reasonable valuation from the market on your stock, of course you look at ways to improve that. And if you're trading at 3 times, like I mentioned, someone could pay a 300% premium to us and it would be a take under relative to any other stock trading in the US. Therein lies the opportunity from an ownership perspective and why you should be buying the stock.
In the same way, DeFi Technologies allows investors to invest securely in digital assets, and this is the future. Yet, why is the company undervalued if it's so important? Russell Starr answered that very well.
Well, why are you trading so cheaply? My answer to that is always the same thing. Well, why aren't you buying it? Like, I don't understand. Like, it's almost like people look at a valuation opportunity as a weakness. People have made money over a century in the capital markets, finding mispriced equities, getting long them, and making a lot of money. The question you should be asking yourself is, why am I not adding as much as possible to this stock in my portfolio? Because, we were trading at 60 cents, 50 cents, 40 cents, and I was very, very adamant. I was very, very bold. And I just said, look, you guys, like, eventually valuation will always trump mispricing in the markets. We're still there. I would argue, based on where we're guiding and based on what we've told you.
Some countries already know this and are trying to be pioneers. So far, Hong Kong's BTC ETF had their largest inflows in one day, and Australia's BTC ETF is now open. As for the US, the current US President Joe Biden has made it a part of his election campaign to shift toward digital assets. He is more willing than ever to understand digital assets and their communities, which means the United States will soon see a major shift toward cryptocurrencies. And Donald Trump is not coming slow either. He has talked with Bitcoin experts about coming up with a crypto solution for paying US debt of $35 trillion. So, whether Biden or Trump wins, the crypto world will win. Even MasterCard has launched a new feature called Crypto Credential to securely send and receive cryptocurrencies using the MasterCard platform. PayPal has also launched its stablecoin on Solana. Yes, the world is turning to crypto, and those not becoming part of it will miss the opportunity. But if you watched CNBC, you should already know how important DeFi Technologies really is. It was just featured on CNBC as a name worth watching. It was EMJ President Eric Jackson's top pick. But how far DeFi Technologies has gone to bring the crypto revolution? Well, DeFi Technologies' subsidiary Valor Incorporation has recently launched the world's first and only yield-bearing Bitcoin ETP with a 5.65% yield. As for now, it's available for German investors. But things don't stop here. DeFi Technologies' subsidiary, Valor Incorporation, also launched the Valor Hedera with a ticker of HBAR, exchange-traded product, in collaboration with the Hashgraph Association, which is a Swiss-based organization focused on empowering a digital future. HBAR is actually the native currency of Hedera and has a market capitalization of $3.1 billion. Even DeFi Technologies acquired Stillman Digital, a leading OTC desk and digital asset liquidity provider. It has over $15 billion in trade volume since 2021, with $4 billion of that occurring in Q1 2024 alone. In the monthly corporate update, the subsidiary, Valor, reported assets under management at a staggering $607 million. Loans of $25 million were also paid. It has been revealed that DeFi Technologies has adopted Bitcoin as its primary treasury reserve asset. It has purchased 110 Bitcoins to initiate this strategy, which will be followed by more Bitcoins purchases to build a solid treasury. Now you can understand why we are talking about DeFi Technologies. Do take advantage of this huge opportunity by clicking the link in the description today.
But what kind of unique forms of inflation might they be talking about in this article? Well, 3 of the largest lenders laid out an updated 2024 cost targets on Friday that were almost $4 billion higher than at the start of the year, and we're just through the first half. Among the culprits, oh, I love this, are regulatory fines, costs to fix past mistakes for customers, and higher charges to pay for last year's bank failures. So this form of inflation, which we've talked about before, has just become a cost of doing business for the banks. They do what they want. The big become bigger. They wield a whole lot more power. Most of their income is generated from trading, which, in Dodd-Frank, they weren't supposed to be doing any proprietary trading anymore. I'm telling you, you better be in a position to weather this storm. You need to be as self-sufficient and independent as possible with food, water, energy, security, barterability, wealth preservation, community, and shelter. Get it done. Because what are the banks doing since they all passed the stress tests? Well, what's JP Morgan doing? Well, they are intending to increase the quarterly dividend and expand to a new share repurchase program. Isn't that great? How about Goldman, who was kind of iffy? They did pass, but they're questioning and challenging the results, which I think is interesting. But don't worry, because they passed, they're going to increase those dividends. So is Morgan Stanley. They're going to increase their dividends, and they're going to do a multi-year buyback program. They're going to reauthorize that up to $20 billion. Woohoo! And Citi? Well, they're too going to increase their quarterly dividend and continue to assess on a quarter-to-quarter basis their share buyback, their share repurchases. And Bank of America? Oh my, shockingly, they too raised their dividend, as did Wells Fargo, a repeat offender, and probably having a little bit more of that unique inflation than any of the other banks, but maybe not. I mean, it's all relative to size. But what does all of this mean? It means that once that money leaves that system, it is not there in this next crisis. This is Wealth Transfer 101. The Dodd-Frank Act was about regaining your confidence, because if you lose, or I should say, when you lose confidence in the banking system, you're done, right? Once you lose confidence, it is so hard to regain. That's why I pay so much attention to what's happening in Zimbabwe, because they are attempting to use gold to bring back that confidence. But unless it's convertible, it's not working so well. But we'll keep an eye on it, because, you know, one thing they knew when they created the system is that people marry the legal money of the state. So you think this has value and you're willing to work for it, save it, and use it as a tool of barter. But the reality is banks are sending those dollars out of the system, leaving you on the hook, because as the industry continues to consolidate, then there's more and more power and risk in fewer and fewer players. You better become your own central banker, and this is how you do it. You know, people want to know, well, how do I become my own central bank? You do what they're doing for themselves, which is they're buying gold at a faster pace than they ever have in history, because they know that we've already begun this transition. Actually, that started back in 2008. We've begun the transition into the new system. How ready are you for it? Yeah, better get ready, because it's coming whether you want it or not, whether you pay attention to it or not. And how horrible is it to own physical gold and silver, especially considering that gold is now entering a new bull market in terms of the spot chart, but it's been in that new bull market according to the physical only charts.
Thank you for joining us for this pivotal episode with Lynette Zang. The longest inverted yield curve is more than just a financial anomaly. It's a signal you need to understand. If this episode gave you valuable insights, smash that like button and subscribe for more expert analysis. Your thoughts and questions are important to us, so share them in the comments below. Stay aware, stay empowered, and we'll catch you in the next crucial update.